This is Short Hammer. It is the 7th of August, 2022, and this is Trading Zones. Hopefully, you've had a wonderful weekend. And last week, as we always wish you, you had a wonderful week of trading because we had some pretty good movement in just a lot of different equities. So let's start off with the RTY. And what we see here is we're right back to that 1925-ish area where we can look and see, okay, last time we were up in this area we retraced, right? And it was funny is last time we kind of spent some time sort of bouncing around, and from this level, even though we're a little bit higher, but from this level we pull back down into the 1882. So what we want to keep an eye on here is, can we clear the 1925 area? And does that open us up into the 1943, right? That's something to watch. Because if we look to the left here, if we go back to the 25th of April and we go back to the 4th of May, roughly in that time frame, like 4th and 5th, we saw that we had a weakness and we sold down from those 19, what is this area here? Right about the 1950s, right? We retraced and we sold down, right? And since then, the we pushed back into the 1917s, below the lower 1920s, and there's no strength, right? There's no continuation, right? And this is interesting that we're seeing this as we're headed into a week where we're going to have the CPI on Wednesday, and also we've seen a change in sentiment, right? Where just a slight shift. I wouldn't say a change, a slight shift in sentiment, meaning that when bad news comes out, the market has seemingly gone up a little bit because the expectation is that is if the news is bad, right, then the Fed may decide to scale back a little bit on those interest rate hikes, right? But then we have the job news that's good, right, which causes the market to go up. And so bad news causes the market to go up because of the slight sentiment shift, and good news causes the market to go up because of the slight sentiment shift. And so there's sort of a battle of narratives. The market isn't about news as much as it is about the narrative, right? And so the narrative right now is, this is the question. You had a good jobs report. The question you ask yourself was, what types of jobs? Long-term jobs? Like what types of jobs? You dig into that. Okay, that's one thing. Um, we the housing market is slightly softening, right? And so that's interesting to look at because there are less new listings, and listings that are on the market are staying a little bit longer, and there are more listings where the sellers are lowering their asking price, right? So those are interesting things. Mortgage applications have been going down, interest rates are going up. So all these things sort of it's an interesting mix here, right? And where people say that, hey, this is very different than the crash from 2008, that around that time frame. It's very different because back then it is very different because right now inflation wasn't 9% back then. That's a different variable, right? And so what you have to ask yourself is the inflation variable as big of an issue as the subprime uh the subprime variable interest rate loans back then, and the types of people that were buying those houses? Are those two issues similar? They don't have to be the same, but are they similar in catalyst? Like, can they cause and it doesn't necessarily need to be a crash. Can they cause a softening of the real estate market to the point where it can really usher us into a recession? Because people are going to have to make some hard choices. The cost of food is up. The cost of just everything. Your insurance, the cost of just fixing your vehicle, materials, fixing your house, everything costs more. Services cost more. You want to get an AC unit done. It used to be 3,400. Now you can be paying up to 7,000. Like the cost of everything is just more right now. So the question is, that's the question. I'm going to move on. It's an interesting question. And I know there are other variables, interest rate hikes, but this to me is the main question that I would be looking at when people are saying, "Oh, this is a very different time than 2008." That could all be true, but history may not repeat, but it rhymes. So, is 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 inflation a similar catalyst to the catalyst that we had in 2008, where the subprime market collapsed, and the catalyst was that people just couldn't afford to continue to make their payments? So that's the question. That's it. So let's keep it moving. So that's what we have to look at, right? So that's just look at the catalyst, and the question is that sustainable? And if it's not sustainable, what's the solution? So moving on off my soapbox. So let's see. So we're watching this level on the RTY. Financials did get like a little bump last week, and we may see continuation to the upside, right? So we just have to see, because the thing with narratives is that it changes, because at some point the market stops being surprised by the news, and at some point it's now priced in, right? At some point the news priced in the volatility in China. At some point the market priced in inflation. At some point the market prices in job losses. At some point the market just eventually prices these things in, and it no longer is a surprise, right? And so the volatility usually comes from the surprise. And so if there's not a surprise, then the volatility can go down. So even if you have continued bad news, volatility can lower if the market begins to expect, right? So it's all about the expectation and actually what the numbers are and what we get, right? So let's see. We see home builders complaining about the cost of materials and supply chains and the lack of skilled labor that they may need to be able to continue to build new houses. We see a lot of corporations scooping up residential properties and pushing those rental rates higher. So it's just a lot of different things that I think that are at play here when we're looking at the real estate market and looking at the economy here in the United States. There are a lot of different variables at play that I think may not have been at play to this capacity previously. So just think it's interesting. Okay. All right. So let's see. So in my opinion, there are two things that can happen. We're not going to just go sideways flat along this line up between 1910 and 1925. We're going to make a decision, right? And so the decision is either we're going to retrace down to this 1882 area, or we're going to hold and we're going to push through, and we're going to go up here and test the 1943-ish area and potentially push through that into the 1950s. One of those two things I believe is going to happen next week. So just be on a watch. If we continue to squeeze up the potential areas that we can hit, if we get above this 1929-ish area into the 1930s, we might go ahead and squeeze into the 1940s and potentially even the 1950s. 1950s here on that push. So we have to see how that plays out. If we go down, watch out for 1882 first. Then below that, watch out for the 1871-ish area, potentially leaking into the 1864s. All interesting areas. So we'll see what happens there. Let's keep it moving. They're taking too long on that. Over to the MES. So as we look at the MES, slightly different setup, right? So we're here. We are trying to gain purchase above the 4150s, which is a very important area. We see how many times we pushed into this, the 4160s, and we just couldn't find traction, right? So what are we looking for this week? Last time we were here, we saw a little bit of turbulence, right? And so should we be surprised? No. What we need to happen is we need the buyers to scale the 4160s and give us a squeeze into the 4200s. That's what we need. If we don't hold these levels and we drift down, the next level that we're watching is the 4070s, right? So if you look at this, the 4070s up into the 4150s is interesting. It's an area where you should not be surprised. We've had this little box here before. Why? Because back in May, look at this. Boom, boom, back inside of it, back inside of it, back inside of it. And then we finally broke, right? So we finally have retraced and we've broken back into this little box here. And so there shouldn't be a surprise that we're bouncing around inside. Something is going to happen that's going to cause a move like this, either to the upside or to the downside. Just be patient. And once we break outside of this box with some significant strength and volume, whichever direction we go, that's the direction I wish to follow. But remember to take your profits on the way, right? So we watch that. So watch the 4070s by the 4150s. Just keep your eye on that level. Remember, inside of that area, you're inside of a box, and don't be surprised at the movement inside of that box. Once the movement gets outside of that box and we see extension and continuation in volume, price and volume, we see that happen, then we can begin to look for the next leg up or the next leg back down. Just my opinion. Let's keep it moving. And remember, this is peaking at the 4-hour chart. M&NQ, just been great. So still holding this uptrend, but this is on a higher time frame. Could we retrace it there? That's possible. Would it impact the overall pattern? Yeah, it would. Sort of the overall sentiment, it would. So if we're watching, look to our left, right? We pushed up into this area, the 13,390s by the 13,430s. And when we pushed up into the bottom of that area, we just tapped it and we retraced to the downside. So what are we watching for here? The first area you'd watch for a test is the 13,273 area by the 13,243 area. We sold straight through that. And we dropped right here into the 1385 by 115-ish area, right? 118-ish area. Drop right into that area. And so 1380s by 13118, so 117-ish. So we bounced back tested, pushed through. They couldn't hold on. And now we're back below. So what are we looking for now? Going into next week, what you want to see, right? Me personally, I want to see that the buyers get us up above the 13,260s and begin to build back up into the 13,370s or higher, right? They want to build back up through there. If we don't do that, if we sort of meander and we drift below 1389s, then that opens up potential room down to the 12,820s, right? And if we get to the 12,820s, you definitely want the buyers to step in and give us a little bit of push back up, right? But if they don't, then that opens up what? The 12,700s, 12,730s. Then we're back down here in the 12,600s, right? So let's see how this plays off. This is how this plays out. But we always watch the 12,500s by the 12,600s. And I'm going to put a block in there so we don't forget that. But this break has been beautiful. But what we need is continuation. And they may sort of play around with this headed into the CPI. And then based on whatever news we get from that, we see which direction we go. Tech was slightly up this past week. I wouldn't say tech has been strong, but it's been stronger than it's been. With AMD. So we just have to kind of be careful to start to say, oh, this is the bear market is over. We're now bullish again and we're running. We've pushed up. So the pressure's been relieved. But I don't know if the quote unquote bottom is in. And even if the bottom is in, depending upon your time horizon, if you're trading, bi-weekly or biannually, right? That means two different things. The bottom being in won't stop you from blowing your account if you're going all in on dip buys and you're doing that on options, right? Or if you're doing it on shares, it just depends. So if we happen to pull back, look how far the bottom is. Could your account take that level of drawdown? And it may not go back through that bottom, but how close to that can your account get? And you remain solvent, right? It's that statement. The market can remain irrational longer than most of us can stay solvent. So you just got to make sure that you take your levels, level to level, and you exit, take your profits, leave a trailer, or you stop out and you look for another position to take on, like look for a setup, right? And that's what you wait for. So we'll see. But watching these levels that I mentioned, keep your eye on that, and we'll see if we continue to go up. Okay, let's see. Let's go over to our first stop is usually Amazon. Back over to stocks. Da, 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 da. Okay. This is awesome. So we got through the 136-ish area, got to squeeze, look at this top, and we let's see, 1 second. Da, 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 da. Yeah. Okay, pardon me. Okay. Um okay. So where are we? Okay. So Amazon's in an interesting spot. Um hmm, pop gold. I don't know if we're gonna get that high, but nice little push here, nice pullback. So if I'm watching these levels on Amazon above the 136, it does open up room roughly to the 144, which we didn't quite get to, but we got close enough technically. And as if we're looking back here on this cluster back on in January, right? I know, split. But just look at that cluster and we'll see. That's interesting. So we'll see if this continues to hold this area or if this becomes an area that we pinball between this 136 by the 144-ish area. That's really interesting. So let's see what happens with that. But keep your eye on Amazon. I think they just acquired IRBT, and I don't know if there will be. I didn't look at the deal, and so I don't know if there will be more of a pullback based on that acquisition, which we do see a lot when a company acquires another company. There's usually a cost to that, whether that be shares or that just be straight cash. And the company usually pulls back for a little bit until the analysts can sort of begin to factor in the pros and cons and the benefits of that acquisition and how it strengthens or weakens the company's position, right? So that may happen on Amazon next week. We have to wait to see. But I do think them acquiring a company like IRBT is huge, right? Just the more things that you can plug Alexa into, whatever it is, and the more functionality you have there, people don't like to have to touch and physically do things as much. Many people don't, right? So if I could just talk and my vacuum cleaner goes, if I could just talk to my toaster, if I can just talk to whatever the appliances or items that I may have inside of my house, the greater my ability to control those things with my voice, the more value something like Alexa has, right? That's just my opinion. So keep it moving on to the next. Um, Netflix, of course. Netflix did see some separation here. And on Netflix, I think what we mentioned is Netflix, and this is before we had all this, right? What Netflix is doing that's really smart is they're beginning to sell advertising within their movies. And listen to the last video if you want to get sort of more in depth with that and what that could mean. But that just means that the focus of eyeballs and using eyeballs to say you've gained new eyeballs or new users, and so that means that you've gotten more eyeballs this quarter than last quarter, and that's how we should judge your growth as a company rather than engagement, which I think would be a better judge. But you can't judge the engagement without advertising, right? So now what you can do, if you're a company like a Netflix that puts out these series and these movies where you have 80 million people watching, right? You can now say to, for example, a Colgate, a McDonald's, or whoever that brand may be, right? And now all of the movies that they produce, the actors are using that brand inside of or that product placement inside of the movie. People naturally brush their teeth. It's always Colgate. People naturally drink coffee. It's always Folgers. So however they do that, as far as working with brands, and advertising that. And the more creative the person that's going to be in charge of that is, and sort of weaving that into the story. So it's more, what's the word? More subtle, because naturally people are using items within their everyday lives. So if you just make sure that it's that brand, I think it's brilliant, right? So now all the people that are already your consumers are now, and you also kind of solve that account issue, right? With people sharing accounts, because now it's not necessarily the accounts, it's the amount of eyeballs that you capture and how you're monetizing them and being able to track that. So if you're tracking the minutes watched, and that's how you're able to sell more advertising within the content that you're creating, that's money. It's a real simple way to solve the issue. I think that issue and the eyeball issue with one stone, just advertising. So I think it's brilliant. So we'll see how they execute that. But I think it's possible for Netflix to become huge, because you already have millions of eyeballs every single week, and it will more than pay for, between the subscriptions and the advertising dollar potential. They can become a very profitable company very quickly. I think this is a potential game changer. That's just my opinion. I think this is a big, 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 big deal. So we'll see. But Netflix is interesting at this level. So we'll see if we get any movement into this gap area and we get a squeeze up. That's possible. Or we can retrace, so we can sort of ping pong around. But that we're out of this 204-ish area and we've gotten some sort of separation from there. Let's see what we have as we go into next week. And we begin to see how things play out. I have to check to see which quarter would we be able to see the results of them incorporating this new advertising thesis or plan into their business, and sort of see the results of that, right? So I think that's going to be interesting whenever that comes around, to be able to look at that. So if you're a fundamental trader, you might want to dig into that a little bit and figure out when they're planning to roll that all out, or if they're already working on that. Sort of when are we going to begin to see some of the fruits of their labor in that area? It's going to be interesting. But if I'm just looking at this just from candle structure perspective, I am watching this lower area here by the 221-ish area. And then I'm watching here by the 229-ish area. I would just be careful, right? We're above this pop gray here. We'll see if we can drift below. If we get room down here to the 212s, that's possible. But it's also possible to pin it up in here and just ping pong around, which Netflix is known to do at times, and see if we can catch fire and get a squeeze here. So we'll see how that works out for Netflix. But definitely watch those levels on Netflix to see if we get some extension out of that. Head on over to NVIDIA. NVIDIA was great. If you remember last week, what did we discuss? Above the 181s, look for longs into the 190s. That worked out, right? Now headed into this week, what we want to see is, will we get, because earnings is 24th of August. So we have another week before that. So it's almost time for the kiddos to get back to school, right? So what we want to see, do we get a pullback back into the 181s, or do we get a buying above the 190s that squeezes us up here through the 197 to potentially the 200s? If we look back at candle structure from April, right, what do we see? There's movement from the 200 level, roughly about the 200 level, all the way down here to around the 183 level. So that we're now in this window, this does open us up to potentially reach the 200 area, right? And so we could say, hey, above the 181s, this does open us up into the 200s potentially. So that could be interesting to watch here on NVIDIA. We have to see sort of what the buying looks like headed into earnings, and just what happened to AMD. I think AMD did well, and I'm not sure if there's still a demand supply issue with chips. I haven't been digging into the fundamentals there, but that's something that you may want to dig into as you're looking at this, right? Because as you look at something like an Intel falling, Intel fell because I can't remember the competitor at the moment. but someone was using the competitor's chips. And I think that for something, and that's why Intel fell. But I don't remember at this moment. But I didn't even think to bring that up. But just keep an eye on this. Let's see. Maybe the AMD. I don't remember. That's not even top of mind right now. But just keep an eye on that level that we just mentioned, right? We're above the 181s, the 183-ish by the 200 level. We'll see how that plays out. And also, if we fall back below the 181s, then I'm no longer going to be looking at, because this 181 area should be a demand area, a temp demand area for now. So all interactions with that level, we should see buyers stepping in. And when they no longer step in, then this demand area can flip back to a supply area, and we can get a slight retrace inside this zone here that we have, which is the 158-ish, 157-ish area by the 180 by 181-ish area right in here. So we'll have to see how that plays out in NVIDIA. Okay, on over to Microsoft. Microsoft has been on one. Always a good company to keep an eye on when it comes to movement after earnings. And I always say, go and read the earnings report. See what they're saying. They'll let you know what they're doing in different areas and how their different departments are performing. Microsoft is a big company. And one of the things that we have to be careful of is when we see the news of companies laying off workers, historically, right? If you're looking at it, if you look at it as a from a linear perspective, right, which means no context, just surface, just a linear perspective. If you're hiring more workers, you're doing more business, you're making more money, therefore you're hiring more workers. If you're laying off workers, you're losing money, thereby you're laying off workers because you're losing money, right? So that makes sense if you're a construction company and you actually need physical bodies to go shovel cement, right? Go shovel gravel. You need physical bodies to go do X, go do Y, go do Z. It's very different for technology companies where they acquire other companies and they also build new technologies that reduces the need for high level talent, right? Or lots of high level talent. So if you're someone like a Microsoft, right? Let's say that you're top heavy or you're middle top heavy. So you're paying some of your top technical people that you have working at the company, 40% to 50% more than you'd have to pay someone younger that you're bringing up in the ranks, that you can sort of not have to pay that amount if both people can accomplish the similar job, similar task, right? And so when we see these big tech companies laying off workers, it could just be that they found a way to do the same thing with less. And so thereby it increases their profit margin moving forward. So that's something to look at and keep an eye on when you hear that. Look at what the company does and think to yourself, are they are they pivoting away from specific sectors and investing more in another more profitable sector? Or are they just losing market share? Those are two things to look at, right? This is interesting. So looking at Microsoft, where we are now, based on this level, the potential is there for us to squeeze all the way up to the 290s. That's possible, right? We saw a pause right around this level here, which is the 283 to 284. And from that, we pull back to the 278. But that does mean we still have room. So even though we close up here at the 282, we still have room to make it up here into the 290s. Let's see how that plays out on Microsoft. Me personally, I'm not going to be long or short this unless we drop back down into the 276s to the potential 271-ish area, right? And from that area, I may think about looking for a position. I'm not going to think about shorting until we get up here around this 289 by 290 area. And to push up into the 290s would then say, okay, here, this is an area that back in April and also back in May, early May, we had a few issues being bullish and getting strength and finding buyers above that area. The oxygen was getting thin. So that's what I'm specifically going to be looking for on Microsoft. If you're looking for small areas in between any one of these lines, the 278, 283, 284, 286, 288 areas, you may consider interesting. Me personally, I wouldn't think of longing this in this area unless we jump over the 284 and we see sort of a bullish continuation, increasing volume and price. And then, maybe you want to chase into the 286s, maybe the 290s. If we dip, then that does give you an opportunity to look for potential buying opportunities, but just depends how much risk you're willing to take on and if you're going to trade that with stops, right? So that if this rolls below the area, you're getting out and you will re-enter on a new setup or new structure. Just pure opinion. It's Microsoft. Let's head on over to Meta. Who recently got their doors kicked in, right? But what does that mean? So on Meta, and I did definitely took this short, right? And so if you remember what we said was watch out for the 170. So the area that we're watching is the 155-ish area all the way into the 170-ish area. And when it gets to the 170s, what do? We take our short. Just and if it happens to break above that, we see separation above the 173s, we're out. So on this pullback, what are we watching for? We're watching for continuation down into the 161-ish area. We'll see if that happens. If we hold here, we're above a pop blue here, which is a pivot. At least we'll get into that soon. Yeah, I believe soon. So right here, we're sort of at almost a midpoint, right? And so from here, you would wish to see buyers step in and give us a retrace back into the 170s. But for me, I'm not watching that. This is what I'm watching on Meta. Do we break the 173 level? If so, that opens up room to the 179 and maybe higher. If we don't get a 173, then I'm looking for a retrace of the 165, then potentially the 155-ish, 156-ish area. We'll see how that plays out. But next levels right here. So I'm just looking at these levels to levels, and I'm not looking at anything else right now when it comes to Meta. Keep your eye open. Someone just really talked to me about sort of my view of the metaverse may be slightly skewed. And what he mentioned was that the power of the metaverse is going to be to influencers and their ability to attract an audience, right? And I won't get into it. I'm not gonna get into it because I'm not gonna get into it. I'll keep it moving. That was a private conversation. Let's see. So Meta, let's keep it moving. Got to know when to hold him. He's probably gonna make millions off what his idea. So I'll just mind my business. So millions on millions. So Tesla, and I did not put this in the video last week, and that I apologize, guys, because that was an easy setup. And so now what we have to watch for here, we're down in the 857s, so we retraced this line here, right? We have to see if the buyers are active at all, and if they are, which is possible, maybe we get a bounce. Come on, don't separate now. Maybe we get a bounce back to the what is this? It says 908. I don't think that's gonna happen here. Yeah, I don't think that's gonna happen, but that's possible. Maybe we get a bounce back to 908. I don't see that happening. We have a split on the 25th of August. So we'll see. So we'll see if we sell below this into the 819s. I really don't know if we're going to be getting too much going on at the desk. So if I'm watching this, you can look to see if there's buying here off the 857s and a squeeze through the 870. What's this? 876. Then the next area, it looks like we're 908-ish area. We couldn't get through 910. I don't know if we're going to buy all that back up. Just because of the selling here. And if you look at the overall market, Tesla was weaker than the market. And so whenever you see something like that, you got to be careful. Tesla wasn't, half stepping and, tiptoeing. Tesla just from the open, Tesla was trying to give it all up, right? And if we look at the movement, just look back at last week and maybe some of the previous week, right? And look what tickers have been the strongest equities. Tesla was one of them. So it's interesting when we're seeing this movement, there's specific tickers that are sort of leading that charge. And Dave, the market's now lost Tesla, right? So we want to see what happens here. I think we might continue down to the 819-ish area. That's potentially there, I believe that's a potential. And we have to see if we even go lower to the 784s. But remember, Tesla is splitting on the 25th of August. So be careful. I believe after the split that Tesla is going to continue to go lower. I don't think that Tesla is going to miraculously rebound and all of a sudden start running again out of nowhere because of the split. I think what we've seen from the Amazon split, the Google split, and just numerous, and it's people haven't been, just buy. There's been a split, even the GME split. There's been a split, and then we've slightly, drifted down a bit. And at some point, the buyers will step in, but you have to sort of see where that point turns out to be. But I think I'm going to redraw a lot of my lines, a lot of these levels, and just because we won't be using them for long. Because if you scroll up here, you'll see some insane levels, and we're not there right now, so we're not using those lines. Probably tying up some bandwidth. I'm just get rid of it. But that's interesting on Tesla. Watch those levels on Tesla. We'll see if the buyer step in. I just mentioned the levels to you. We'll see what happens there. I'll probably be swinging. I do like a wide vertical on Tesla or something like that. I don't know. I sold premium in Tesla last week. Like, yeah, it was good because I sold it up here. We'll see with the CPI. Just lots of news out there. And also the turbulence between China and the US with Tesla having a lot of its manufacturing. It's like things can be weird, right? So I guess we just have to see how things work out in that. But that's something that we haven't really I think discussed. We want to see definitely how China reacts to longer term to what's to Nancy Pelosi's visit. I think it's really interesting. Okay, let's keep it moving. So I'm watching Target, right? And this is not something I'm 100% recommending. I'm just saying that's something that I might be looking at personally. So Target is interesting. We have earnings coming up, and can this dump? That's possible. But what I'm looking at is the back around the 27th of May when we pulled up into this area, right around this 166-ish area. Like just right in this area, we rejected. There was just no strength to the movement. This time we're up again. We're seeing slight acceptance. So I'm just going to watch to see how that plays out. And this looks like a janky M pattern, right? See, like here to here would be the measurement. So we just have room down to 158, maybe lower. But at the same time, it seems as if we're having slight acceptance at this level. So I'll wait to see what happens. If we sell below the 160 390s or 163s, I might be looking for something here to the downside. But we'll see what happens on Target. Earnings is right around the corner. Got to be really careful. Really, really careful. Don't get caught with your hand in the cookie jar. Well, actually, I say hand in the honey pot, because that's usually where you get stuck, right? And for those that have had true honey pots, you know what that means. But let's see. Unless you're Winnie the Pooh and like your hand is smaller than your arms. Weird. Neither, not important. So watching Target, and I think it would be great if we can get some movement on Target to the upside. I'll just be keeping an eye on Target. I'm gonna set some alerts here. I just want to see if the buyers do anything on Target. That's all. So I'll be watching Target closely to see if we get any movement there heading into earnings. And if I see a good setup or a good play, I'll take it. DLTR. This is just, I believe that when things are bad economically, and right now things are more expensive than ever, that people do go to the dollar store and spend a lot of money there. Historically, it's been true. Will it be true this time? Will they blow earnings out of the water? I kind of think they will. Unless they have a supply chain issue, I don't see any reasons why they would miss earnings. I'm not giving any recommendations or anything like that. I just think that I'll be looking for a play here. And remember, guys, for me, when I'm taking a play, if it goes to zero, it's not a big deal. The chances of it going to zero are low, but I'm not taking a play and I'm like, oh my gosh, I'll blow my account. Like it's just not gonna happen. Like it's not gonna happen. I'm not taking 50 Teslas. Like it's not gonna happen. It's not gonna happen. Especially heading into earnings, like 50 Tesla contracts. Sure, it's not gonna happen. So I'll put on a play. There'll be some moderate risk and major reward, right? And so we'll see how this plays out. But I think DLTR is interesting. I'd watch it. If we look back at the previous levels that we've seen action, right around the 152s, we've seen some things. We've seen some pausing at the 162s. All through here, like they've been slight pausing. But if this pops, it's gonna go, and we'll see. We'll see how this plays out on DLTR. Yep, but that's going to be a fun play for me. It's not anything where I want anyone to it's not, I don't feel as strongly about that as I felt about NVIDIA and I felt about Tesla, to be honest. I just feel strongly about those and their levels because the levels are clear. And I like things where the levels are very clear. Like it's very clear where your levels are, where you should get in and where you'd stop out. It's very clear. With DLTR and Target, it's not as clear. Those are more nebulous, right? So those are plays that I'll put on with like some type of option strategy. I'll have to talk to Elisa about that's like she has great, whether it's calendars or double calendar, like she does all that stuff and she's really good with those levels and figuring out what type of play to put on if we're doing an iron condor or whatever. So I'll talk to her about that and put on a proper play and see how that plays out. But win, lose, or draw doesn't matter. Just manage your risk. So looking at CMG, if you these lines have been there, guys. And so you see numerous tests of this 1548 before we pop and springboard a little bit. So I do think we are approaching an area here, the 1604 up into the 1620s. We'll see if we see weakness through this 1610-ish area. I might put something on there to see if we get a retrace to the 1548s. I just have to see how the and CMG is horrible on premium. Not gonna lie, it's horrible on premium. It's horrible on shares. It's just spready, right? So if you're interested in trading something spready that may go your direction but not repriced properly for you, that's CMG. But I may put something on here in expectation of a retrace back down these 1540s. We'll see. On Tesla. I mean, on the Tesla, on CMG. We'll see on CMG. But I like that we held this 1548s, but I do think that once we start to get up here into the 1600s, that the air is a little bit thin. So we'll see if I'm wrong about that. 1614s. Yeah, we'll see if I'm wrong about that or not. But I think that's interesting on CMG. Post earnings, yep, they could have blown it out of the water, and maybe they continue to blow it out of the water. Not important to me. I just like these technical levels. So I may be looking for a slight reversal on that soon. But I'll be keeping an eye on CMG just based on those levels. And there was something else that I was thinking about. I don't know why. Okay. CI, healthcare. Watching to see if we that we kind of chopped a bit after earnings I don't like, but I'm gonna keep an eye on CI because when it gives you movement, it gives you nice, nice movement, maybe 10 points or more. And so if we continue to go up, I might look for a setup here. Especially if we break these highs. I just want to see if we're gonna do it or if we're gonna continue to retrace. But if you're looking at this, look at this chop, right? If we look at just above the 280.56-ish, where's the strength? So we have to see if that continues, if we get a squeeze into the 286 pop blue, that pivot there, or if we drift below this pop purple at this 270, it says 277, 278-ish. We'll see. But I'm just going to be watching this and wait for it to show me that we're going to get some separation. That's why I haven't even drawn lines on here. Next time you see it, I may have lines. I don't know if I'm going to take it, but I think it's an interesting thing to keep an eye on. And UNH, just keep an eye on all these healthcare tickers. I think it's UNH. Is it UNH? Yeah, keep an eye on all these health tickers just to see what they're doing, see their movements, because usually health tickers can move independently of the market overall at times. So you want to sort of keep an eye on that. Something that I did miss that I'm kicking myself on was the pullback here on Chevron after they beat. And the reason why that was interesting, and this is just the way to look at things, right? Oil just had one of their largest quarters ever, right? They blew everything out of the water, and it was a just a strange confluence of events with what's going on in with Russia and Ukraine, what's going on with inflation, what's going on here. It's just a strange confluence of events that gave them that. After that move, it was a short. Why? What are the chances of all those events coming together again to create another record-breaking quarter? It's pretty low. I should have like it's clear that it's pretty low, right? It's 100% clear that it's pretty low. And so I did miss that one, but I'm going to be watching to see what we do from here. That if we are we going to see weakness that takes us down to the 140s, maybe the 142-ish area. So I'm going to be keeping an eye on that on CVX since I missed the first play like a genius. And I don't think I did it in the video that I posted, but I think I did it. I was talking to a bunch of people about it, and I did not take the trade. They took it, and I'm kicking myself on this one. But we'll see what happens next. I'll be watching this this closely. But just look around as you're looking, for what to watch on the week. Ignore the noise. Keep an eye on what sectors pulled back last week while we were going up, and what sectors we're moving up with the market. What were the sectors? Take a look around, see what's going on in these different sectors to sort of get an idea of, are investors moving towards or away from certain things, right? Cyclic rotations into and out of different sectors is normal, but just keep an eye on that. It's really interesting. It's an interesting thing to watch right now. I think that is it for moi. I am donezo for now. 413. Let's see if we get through the 416s. So that's something to watch. If we get through the 416s, do we get room to the 417, 27 to the 418 ish? Through 418 is 419. So we'll see. Maybe not. But I'll be watching that on SPY. Let's see, drag this down. So we'll see. Right. And we held the 407s on the last pull down. If we drop that, that does open up the 403s. So we do definitely want to see what the response is. Yes. So if you enjoyed the video, please go to our YouTube channel, Power of Pivots, and subscribe, where you can look forward to receiving not just videos from me, but also videos from Elisa as she discusses how she utilizes her Power of Pivots scripts and setups to be able to find great pre-market, intraday, and post-market entries, also swing plays. Thank you so much for your time, and remain safe. And always remember, you're one trade away. And when I say you're one trade away, not from one trade making you $1 million, not that, right? Because we're not gamblers, right? We're not degenerate gamblers. What I mean by that is you're one trade away from having your system and your confidence locked in, no matter what you're using, right? Whether you're using pivots, whether you're using trend lines, whether you're using Fibonacci, whether you're using standard deviation, whether you're a wolf wave trader, no matter what you're using, doesn't matter what you're using. The most important thing is your confidence and the process through which you make decisions. It could be a fundamental trader, doesn't matter, right? Having a good process in place and having the confidence to execute that is the most important part of trading, right? Trade based on your personality and your account size and manage that risk. So when I say you're one trade away, what I mean is you're one process trade away, understanding, confidence, set up, pull the trigger, being able to execute. You're one of those away from the aha moment that totally changes your life and changes your trajectory in trading. Thank you so much. And I'll say it again. You're one trade away.